Hello. Happy Thursday. How's everyone doing today? Good morning, Sterling. Already in here. You might want to explain the yen carry trade and how important this is. We can talk about that one. Why don't we look at the yen and talk about that? UPS was a beat on earnings, a miss on revenue. Remember, revenue's always more important. Patrick, good morning. Durable goods did beat. Durable goods coming in very strong. GDP coming in, or at least the first estimate of third quarter GDP coming in very strong. So we'll have to see. Coming in incredibly hot. So that's where we sit right now. What else do we have in here? What else do we have? We had MasterCard earnings, which was a beat. Good morning, Tony. Good morning, Martinez. Good morning, Anissa. Good morning, Royal Palms. Also, ECB was a pause. So we got that out of the way. They are on pause mode. Let's just recap this. So durable goods was forecast just above 1.1%, 1.1 to 1.7, coming in at 4.7. GDP forecast at 4 to 4.3, coming in at 4.9. The PCE number, core PCE was forecast at 2.5, coming in at 2.4. So that's slightly better, but the markets seem to like this number. Actually, just from a technical analysis point, they started bouncing off of key support during the European session. So initial jobless claims coming in slightly higher. Continuing jobless claims, pretty big pop in continuing jobless claims, 1790, 1735 to 1740 expected. Real consumer spending also coming in at 4% versus 0.7. So the consumers not fully tapped out yet. That's where we sit. Remember, tomorrow we get the other PCE prices, not based off the GDP, but for September. So that was based off the full quarter advance. We get the September PCE numbers. These are a little more reliable also. We get personal spending and personal income. So that's something to watch for tomorrow. But we got a lot of the information out of the way in terms of that. Waller has no comments with his speech about the interest rate situation. Kansas City Composite and Manufacturing coming out at 10, the minor regional index, and then that's really about it. We see the heat map so far. Meta stronger. It bounced after earnings and then reversed strongly. So going to see where that opens today. Google down. Some of the mega caps are sort of firmed up. Remember, Amazon earnings after the close today. MasterCard after their earnings down 2.67% so far. Real estate utilities are the only thing, but I'm expecting this to somewhat change going into the open comm services, the biggest negative with Meta and Google. Fed watch are still on pause for next Wednesday's meeting. And fear and greed still in fear mode. So what else do we have? Good morning, Jake. Good morning, Jacob. Already in and out of the 15-minute double bottom in the Russell. Currently at the 15-minute ES double bottom and the 15-minute 10-year double top trades. Well, look at this, Sterling. Is it not busy at work? Good job trading the doubles. Again, we have Amazon, Enphase, Intel, Ford, Chipotle after the close. The big one, of course, is Amazon. And tomorrow morning, we have the oil. Phillips 66, Chevron, Exxon. So those are the big things. It's earnings Friday for oil. Let's take a look what I'm talking about. Let's just jump out to the bigger picture. You see, we've come back down. This is the weekly. We've come back down to the weekly. Here was the key breakout level. This was this key base. So near the high get out of here. Near the high from December of last year. Then we retested in January, built a solid base in April and May and broke out. We've now retested that area. So I'm not surprised to naturally, just from a pure technical analysis perspective, not surprised to at least see some buying pressure in here. Return to the breakout level with that resistance becoming support. So not surprised to see a bounce also coming out of oversold condition with a potential divergence setup and daily cycle still at the bottom trying to turn up. So if we get a stronger tick into the open with some buying pressure, I am, besides looking at Sterling said he was in the 15-minute doubles, and here's what he's talking about. Completely valid trade. Already hitting the first target. All right, so besides those, if you want to, or if this continues strong, this would be one I consider rolling if it does consider strong through some key levels going into the open. Let me change the colors on this. You know, if it keeps with a strong tick or with some momentum bars continuing, that's always a way if you're looking, because look at the base it built. So here you see this is the lows right around the European Open. Remember, European Open is a range because of all the different countries that open. Then we retested it before. Then we got the GDP numbers coming out, hitting the first target. So even on a pullback to 41.88, 41.90, no problem there. You start getting back below there, you know, it's a little concern for the continuation if this collapses into the open. Technically, the stop after hitting right now is the farthest away stop would be 41.82 on a 15-minute closing basis. But you see the 50% is even just right there, so any return to that is no problem. Just showing you, and Sterling can trade this however he's doing. I know he takes some partial profits on the first and then the second. Now, keep in mind also, there is a gap behind here. So if we get the gap magnet fill, the gap from yesterday, stop popping up. That could be another key area. So above the 4207 target, I'd be looking at roughly, the next target for me would be 4211. 4211, and then a very key, should we get a sort of a rip your face off reversal short-term capitulation day because out of oversold conditions, 4217 would be my next target up there. So that's where we sit right there. Oh, you're off today. I thought it was normally Wednesday, Sterling. So that's where we sit now. You got a plan. I already went through the stop level on that double. So that would be then watching for a retest. If that stop level was hit on the double for the remaining targets, then I'd watch for a retest of the lows. Also, remember we had these sloppy head and shoulders on the weekly basis. Shoulder, head, shoulder, which triggered back at the end of September. Never gotten validated and come down and hit it. Remember, it bounced off the first target. And now we've hit the second target area. So that's another key factor right here. Now, longer term, I'm still watching for this. Remember, I got an intermediate sell signal as of last Friday. But we can have still rallies after these intermediate sell signals. Also, remember, on the daily basis, the 200 simple is now resistance and the declining rotation zone. Also, on the weekly, unless it's a massive rally over the next couple days, this weekly is going to remain crossed. And that's also, we don't trade the crosses, but this shifts me with a number of things. I've shifted to bear mode because the intermediate sell signal, that means I'm patient and watching for rallies and then watching for the rollover plays. NASDAQ, you can see right here, the NASDAQ did not have a double, but came up, retesting. Just here you go. So here was the base overnight, sold off. You got the reversal European Open, broke back above that resistance, retesting that area, and then you got some momentum coming in right there. The key areas, it's coming into the yesterday's futures opening at yesterday evening, gap down area. But the key area I'd be targeting above that is about 14,460. And then above 14,460, let me just jump out to the little longer chart. Based off of here, we have roughly 14,507, 14,510, then 14,603. are the key levels. We're back to a pretty decent cluster area right here. And then we've already spiked through the short-term harmonic area that we're trying to put in a little low. Also, NASDAQ longer term. NASDAQ longer term coming in with the 50 area. So not quite there yet, but I'm expecting another rollover play and the bottom of this channel flagging pattern. Now, I'm not expecting this channel flag to break out to new recent highs, but this is at least a short-term area to watch for. So going into today's open, you know, as long as you don't really get below this 14,340 area, it could still be strong into the open. If we do break down, the next key target is, well, if I didn't switch to the Dow, the next key target back down would be, and you see here on the daily basis, sorry I didn't point this out before because it's a weekly clear path, but you see these two bases formed in June. You see this beginning of June and towards the middle of June. That's the area we're also bouncing off for support. Now, 14,700 is very, very key area to watch for on a continued bounce. If we break below today's low, the next major target isn't until 14K. So if it rolls over or Amazon has bad earnings, there you go. The Dow, just take a look here. And it's sloppy right there. We're just going to go with the Dow key resistance being about 33,350, 33,360. And the next, if we roll over, 32,861, and then the major coming in at 32,7. The Russell, Sterling said he was trading the double here. Trading the double here. I mean, it's got a little messy right there, but, you know, we're not going to be. It's a 15-minute, and he's out of it already after the first and second target has been hit. So if you're looking for other targets, the upside in the Russell, it's going to be about 16,668 and then 1675. I should say 1668, not 16,668. So those are the key levels there. For the Russell, you really don't want to break him back below 1657. If it does, besides the retest of the low area, the target to the downside 1646. The VIX finally should be reversing off of here. I did not check if this was, and it's not. Did not get into double top territory, so the key levels I'm still focusing on are 20. We start breaking below 20, I'm watching for that continued rally, possibly through tomorrow, because you could get some short covering through tomorrow. The notes, we had the little mini double, that 4-hour double, hit the first target and was invalidated, but now this has turned into a daily double. That's the only thing that gets me bullish on the notes, is above 106.22 on a closing basis, still against the daily rotation zone. That's the only thing. If we break below the 19th lows, 104.30, and then we have 104.17. Take a look at the yield. You have a potential double top, but that's a long way off from triggering. Need a close below 4.798 against the rotation zone. Right here, you did have this little mini double. The mini double right there. But that's just a 15-minute trade. So, but rates could still, I'm still expecting rates could possibly break out to the upside again. The 10-2s still trying to rotate back up, but again, it's that zero mark that's key. Dollar index pulling back a little off that strong GDP print, but broke out from the flag to the upside. So, going to see if this reaccelerates. Key support is right now at 106.20. And then 105.96. If we break back below 105.96, it probably looks like a false breakout. Crude, which bounced strongly against the trend line yesterday, reversing it today. So still no fantastic pattern left in crude. Still watching that 80 to 79 for major support. Natty gas, not much to talk about there. Gold does have a potential double on a daily basis. Needs a close below 1964 against the rotation zone, but I'd really pay attention to this 1945 first target. Has not triggered, might never trigger. So far, this is a sideways correction, getting out of overbought conditions with the sideways corrections and daily cycles getting back closer to the bottom. But that's the only thing I'm watching at 1964.6 level. All right. Sterling, we have the 88 now. JGB's at 88 basis points. Explain the carry trade. Carry trade is any carry trade from a currency standpoint is borrowing in a lower interest currency and investing in a higher interest currency. So in terms of the yen, since the rates have been kept so low, either negative or zero for such an extended point of time, even with the ceiling being 50 basis points right now, which they look like they have to raise it potentially again, it's still, you can borrow. Let's just even say you're borrowing at 50 basis points or even one. Let's say just go with word of 10 years. Let's say you're borrowing at 88 basis points. You go into something like our 10-year at 5 or 4.8. So you're collecting, you borrow the yen cheap, and then you roll it in, you borrow it and turn it into dollars and invest those dollars. Now, it doesn't just have to be in something like the notes or the bonds or the bills. You could invest in the stock market. You could invest in things. You can buy foreign stocks and say, I want to invest in dividend stocks that pay a yield too. So I'll get cap gains and the dividends. All right, so what happens when you have to unravel that? If they keep raising the cap, then it gets less and less beneficial to borrow. If the interest rates start going up, especially if they have to start actually hiking rates in Japan, then the carry trade could start to unwind. Why? Because your cost of borrowing becomes more expensive. So what that does is the inverse. It starts unraveling. It could lead to pressure on our notes and bonds from selling stuff and bills, and it could lead to also a move down potentially in the stock market. So that's the carry trade explained. We see here it broke above that 150 area, 149.90, and spiking next harmonic. But we're going to have to see if the Bank of Japan's going to really have to step in here and try to squash this. It's in major topping territory. This is, you can see, let me go to the weekly. Besides back in October of 22, which was the strong reversal, this takes us back. I mean, 150. It's not even on here again. So we get beyond that. I don't even know if I have the monthly data. I'd have to look that up on my other charting thing, but we don't. So this is in critical territory for the yen. So we're going to have to see. All right. Hope that explained it. Let me know if that made sense. Let me get back to my charts. Euro technically has not invalidated the double yet because there's no stop raise. It's on a close below 105.20. Still not done. Not looking so good. Remember, that was the channeling double. So that's not looking so good. The pound, which never triggered, turned into a triple. I'm not paying it. I'm paying more attention to the euro right now than the pound and the yen. Spiders. Again, we're going to have the gap up today after closing just below the minor harmonic area. So the key areas are at 416.64. 417.95 is roughly the first area, but the first thing will be technically the close, 417.55, then 417.95. Then the major key area is 419.50. 415.69 should we roll over, and the next major target is 413.20 area. So just pay attention. Again, I'd pay attention to the tick also going in for the first 15 minutes of the open to see how strong that is. The NASDAQ, the Qs. We're looking at 349.08. So the first targets would be, I'd be looking at the gap fill, 350.34. Then 351.25 and then 352.75 are the key targets I would personally be using to the upside. Remember, not trading advice. Breakdown, if we roll over and can't sustain some of those key levels I mentioned in the futures, 348.50 and then 345.77. What else do we have? Let's see. Great explanation. The carry trade unwinding could cause international margin calls. It could. But you know what? I mean, they'd really have to start hiking rapidly to. We're still a large interest rate differential, but it depends on the duration of borrow. Remember, and I have to look into that a little more specifically. It depends on the duration of borrow. If the borrow has been really short term, yes, that leads to a more rapid unwinding, and I don't know the duration of borrow right now. Tesla, after still triggering the massive weekly double top, little gap down on any rally of sympathy rally at the market. The first target would be 212.42, and then the major target 225 to 25 the upside. I'm still watching for rollover plays in this, with the key target being 179.35. What else do we have? I see you put in uranium. Which did trigger. Did it? I don't remember if this did or not. 26.45, 26.48. Did not. It confirmed a double, but did not technically trigger the double. It didn't technically. It confirmed, but did not technically trigger. But I'm still watching for continued bullish plays on uranium so far. GIS triggered a daily double bottom yesterday after almost completing weekly double top. Well, when it gets this close, I wouldn't worry about it. This would have been used for a trailing stop. Okay? You know, if you're in it trying to eke out a little bit more and you see this, I just get out of the damn thing because it could bounce. Now, would it technically invalidate the final stop? I mean, when you get something that comes up, what was the low here? The projected price was 60.14. It got down to 60.33. I wouldn't work. You know, that's just done for the time being, especially when it triggers a double the other way. All right, what else do we have? NVIDIA. Still not closing below the key level. So nothing else to talk about there. Amazon with earnings today. By the way, Amazon with the double. Remember, it hit the first target, bounced off it, never invalidated the other targets, came back down yesterday, hitting the second target. The final target area, 117.50, is right where the 200 is. So if this rolls over as bad earnings, that's going to be a very key level. Now, if it broke below there, if they, I think their Achilles heel could be AWS at some point. Not saying for this earnings, but the next target would be 113.65. On any gap up, the key resistance, the major resistance is 133. The minor resistance is 123, 124, and then 130. What else? I'm just thinking if there's anything else. Let's look at the heat map again. Where's the heat map? So, yeah, Meta's bouncing back. Google's bouncing back. Meta, which had the strong reversal yesterday. Keep an eye. Still, Meta has the potential major double top in play. Nowhere near triggering with the open where it is now. But going to keep an eye on that still longer term. Should we get some selling pressure even after a little bounce? Google, yes. Google triggered its double top yesterday. Thank you for reminding me on that one. So, any bounce plays in this? Now, technically, the stop, 135 will close above 136. Let's just put it that way. So, which would be the full gap fill too. I'm not expecting this to fill the gap. Right now, Google's trading 123.04. I wonder where this traded pre-market. I wonder if it did trade down to this 121.25 already pre-market. If it did, I'd look to lower the stop anyways using that pre-market data, be a little aggressive on this. So there we go. There we go into the open. So Google did trigger. So on any rallies in Google, I'd be watching for the rollover plays. Let's just take a look at the S&Ps and the tick. So again, hitting the first target on the double. Remember, that's 41.88, 41.90 is key support. The tick, and then I got to jump. Not a super strong tick yet. So I really have to see the tick start getting above the 600. I'm surprised that that's not a super strong tick, but if it keeps pressing above 600 and you get some spikes towards 1,000, then we could see a little more of a sustained rally, but that's not a super strong tick just yet. So keep an eye on that. All right. That's about it. Thank you, everyone, for tuning in. I hope everyone has a wonderful trading day, and I shall talk to everyone tomorrow. Bye for now.